First up is an article that I pulled up. It's a decade of demolition without substantial development has reset retail. So obviously, if you guys have been following along over the course of the last several years, really even pre-COVID and obviously post-COVID, retail has experienced quite a bit of a revitalization. But a big factor as to why that's the case is because there really hasn't been a significant amount of retail development over the last, call it 15 years, really since the great financial crisis. And so they referred to some statistics here that were somewhat surprising. One was that with some 155 million square feet disappearing from the market over the last 5 years alone, the country's net retail inventory increased by just $500 million square feet over the last 10 years to 12 billion square feet to the start of 2024. And if you were to compare that, I'm assuming with industrial, I mean, it's probably night and day difference with the amount of deliveries that have been taking place over the last decade. And so most of this article highlights how the market has been responding. Obviously big retailers have been affected greatly since the great financial crisis, and there's really been a slow deterioration since then. But a lot of municipalities and places around the nation have been repurposing retail or even straight up demoing retail to then incorporate either multifamily developments or other types of commercial properties. And that's led to somewhat of a constraint in retail. And they also talk about here briefly medical kind of playing a role in some of that as well. So you're seeing a lot of healthcare services now occupying small strip centers and even larger footprints within strip centers because of how strategically located a lot of these centers are. They're usually close to neighborhoods. And when you're talking about urgent care, when you're talking about, dental, when you're talking about other types of healthcare services, it's becoming more common to see them locate closer to their clientele. And that's obviously benefited retail owners significantly. And one of the things that I thought was interesting here was apparently they were talking about how a vast majority of the newer developments that are in retail are single tenant retail buildings. So you're usually seeing or build to suit properties for specific tenants. And I think in here somewhere it referenced that 75% of the developments that are undertaken typically have, here it is, I think it said, most of the recently developed space was single tenant or build to suit or small spaces in mixed use developments. 3/4 of new retail space over the last 5 years opened with a tenant already in place. So you're seeing, developers not even taking on these developments until they have a tenant ready to go for the space as well. So just thought I'd share that. It's kind of interesting.
But I'm seeing that even strip mall guy would be the first to say is the strip malls are doing great. A lot of them are service or community oriented, so there's always going to be demand for that type of retail space, whether it's a chiropractor, an optometrist, liquor store, hair salon. Like those are just they're very common. So I think that consumer habits are changing, and the shopping mall perhaps isn't as popular as it was 10 years ago, but there's still a healthy demand for retail space in general.
I was most shocked to see, that 500 million number square foot development just in the last 10 years. That doesn't seem significant compared to some of these other property types. I'd imagine industrials probably clears that number quite comfortably, but I'm not sure.
Every
Yeah.
year it's been clearing that number.
Yeah, that's what that's what I'm figuring. So, 50 million a year in retail development doesn't seem nearly as significant as you would see in the industrial space. And I mean, especially even in multifamily, I mean, you've got obviously significant development. So it's kind of an equilibrium equation. And that's kind of one of the things that, in my opinion, bodes well for office is that, it's going to take a while. You're going to go through a lot of hurt over the next decade. But at some point in time, you're going to reach that equilibrium that you're kind of seeing happening with retail. So, maybe that's 4 or 5 years out, but I see the potential there as well.
Yeah, I
Or
think
40 or 50 years out.
40
Yeah,
or 50.
exactly.
I don't know about that, man. I think it'd be sooner than that. I really do think it'd be sooner than that, especially in major metro areas. But
you think it's sooner they're going to do what?
What I'm proposing, and this is a controversial
No, I'm curious.
take.
I'm curious. Good.
So I'm saying that because you're seeing in retail, right? I mean, obviously retail development has tapered off significantly since the great financial crisis. You only had 500 million square feet of development over the last 10 years. Now retail has been crushing it, but it's a function of the fact that there's limited space as well, right? Because supply and demand is just based on, if you have a ton of supply and lower demand, then obviously, you're going to have a lot of vacancy and pricing drops. Whereas with retail, there's just a limited supply and demand's not been decently strong. So it's, I think what's eventually going to happen is with the lack of development in the office space and maybe more employers deciding they want to get back to the office, at some point we'll hit an equilibrium point. I don't think it's going to be 50 years from now by any means. It may be 5 to 10 years from now, maybe even less. I don't know. It's obviously market specific, but I think office will eventually bounce back. I just don't know when. So
yeah, okay. So, well, quickly, I looked it up. In 2021, I mean, this is just a quick stat. There was 342 million square feet developed in industrial alone. Just to, right? That was 2021. But I think that there's some fascinating pieces to this, which is I'm thinking that there is going to be a pullback on office to the point where like there's clearly way too much supply at this point for the demand, and I don't think demand will ever be where it was. I think it'll actually be probably where it is today for the foreseeable future, right? Like I think that I think today's demand for office is probably going to be the demand for the foreseeable future, within a few percentage points, increasing slightly over time, depending. Just because also a lot of the jobs, think about what office jobs are, right? Like a lot of people who are going to an office, right, or even going to a place to do work. A lot of the time, like especially as we're going more into tech, it's not as in demand to be in an office as it once was, where people had to go somewhere to be with people to collaborate. Essentially, like a lot of it is become more technologically savvy. So I don't think office will ever see that. And for retail, I actually think along the same lines. You're like, I just don't see retail jumping up and having the push for demand like industrial did over the last half decade, right? I don't see that retail is going to have that boost, or I don't know what it would be, what would have to happen in society for retail to have some crazy demand spike.
Well, it's just retail evolves. It's just like every other industry,
Agreed.
and that's what I'm proposing is that office will evolve, and part of it too is this taking some office inventory off the market, which comes through repurposing or, in my opinion, demoing buildings, which is not a popular opinion. I think a lot of cities don't want to regress backwards because the idea of demoing a multi-story office structure is kind of something that people don't want to contend with, but maybe that's what you have to do to really normalize the market quicker. But a lot of cities, I don't think will take that action, and it's going to take longer to get to that point. But yeah, good discussion. I'm looking forward to this next article. I had to log into Wall Street Journal, so I will pull this up. It's one of Chad's articles. A massive U.S. nuclear power plant is finally complete. It might be the last of its kind.
Yeah, I think this is fascinating. This is such an important discussion right now, too, because there's all this movement towards clean energy and government mandated in a lot of cases, but the grid isn't capable of handling the demand now, let alone with everything being electrified and electric vehicles being mandated in the next 10 years. I think nuclear power is actually a very viable solution to it, but there's so much pushback to it. In this case, this was one in Georgia. They had 2 reactors and they added 2 more. Cost was double what they expected, went from 15 billion to 30 billion. So they break down just how much it costs per person in Georgia to subsidize and finance this, essentially. So really fascinating on how it went. I'd love to see more nuclear, but I think it's a problem from the standpoint of everybody in the area is going to push back with it, with the NIMBYism and everything that comes with it.
What's fascinating here is if we can even the still plant Voigt. Apparently, it says that these 2 newest reactors can each deliver power to around 500,000 homes and businesses, according to Georgia Power. So just 2 of those reactors. That's crazy.
So what by the way, what's interesting, and I know actually I feel like we've spoken about this a few times. I think even just you and I have, Chad, where the thought of like, I am so blown away as to why we're so hesitant and we are so far behind countries like China and countries in Asia, countries like Russia and other things like that. What's so fascinating, we are so behind in nuclear power, right? Like we are so behind in the United States on nuclear power, and like they're so hesitant to push harder on it. Like, because everyone's like, oh, we want to, be more not more cost effective, but more, better for the environment. What happened, decades and decades ago with Chernobyl and other things, I feel like just scared the shit out of a bunch of people. And they're like so scared to get back into what was actually, this is such a smart idea to double down, because everything else when it comes to gas and coal is destroying, and polluting the environment 10,000 times worse than nuclear power will, especially with the new reactors that they have, which are infinitely more effective. I don't know what it's going to take for the U.S. to turn around and have a better feeling about nuclear power, but I would love for them to double down and catch up to China when they can.
Obviously, the sentiment around nuclear, I think, has probably changed in the last, call it 20 years. I mean, obviously, you mentioned Chernobyl. That was a big kind of wake up
But
call for a
but
lot
it's
of
not like they're
people.
going full throttle.
No, they're
still
not.
very
No,
hesitant.
but compared to what it was, call it 20 years ago, or even relatively
Sure.
recent with Fukushima, when everything happened over there, I mean, people were pretty, again, the sentiment was very much against nuclear in this country, and obviously I'm half Italian, half Puerto Rican, so my mom's side is all in Italy, and obviously in Europe, nuclear is something that's been around for eons, and they still power many of the grid. A lot of the grid is powered in that manner, so it's obviously a much more acceptable way to generate power in other countries. And there's a lot of the technology nowadays is very much safer. And honestly, and Chernobyl and Fukushima are both unique instances because Chernobyl, obviously lack of maintenance for many years caused that to overheat and caused a meltdown. And then Fukushima, if I'm not mistaken, the big reason why it melted down was because of an earthquake or something, right? Wasn't there like a natural? I think it was an earthquake that caused the reactor to get affected, and then from there was just a full meltdown. So that was kind of like those are two different instances as to why that took
earthquake
place.
and tsunami.
Yeah, there you go. So it was definitely a kind of a unique event that transpired that led to Fukushima. Now, Chernobyl was a different story, but I think a lot of that had to do with just
ready for this question though? Hold on, I'm very curious to get your thoughts on this for both of you. We'll keep it fast because I know we're on a time constraint. Do you believe that the real estate surrounding the plants is going to go drastically up in value or drastically down in value?
Down. Yeah, no one wants to live next to a power plant, man.
I'm not saying live. I'm not saying
you're
building houses.
Or work next to one.
Yeah.
I mean, it's like jails, for example. I mean, you kind of have to select a location to put them where no one is around it, because no one wants to live next to a jail or work next to a jail or do anything next to a jail. So I would imagine it's probably similar in that regard. Man.
Just make sure you're not buying real estate that all of a sudden a nuclear plant's going to pop up next to you.
Yeah, that's true, right? Then don't buy it in the middle of nowhere, because that's probably where they're going to have to locate a lot of these,
Tom had a good comment as well. That Tom in the comments pushed back because of national security issues. I think that's a very valid point. I mean, if you're going to target the U.S. and you wanted to wipe out critical infrastructure, that'd be a natural one to do. But I mean, if somebody's targeting the U.S. at all, whether it's a nuclear plant or even a small little strip center, I mean, that's outright war. Like we're in trouble. Like the whole world is in big trouble if that ever happened, no matter what got targeted in the US.
And I'd be more concerned, to be honest with you, like from a cyber attack. That would be where I'd be more concerned, because everything's so interconnected nowadays. And granted, obviously targeting a power plant would be quite significant and would affect a good amount of people in that region. But obviously cyber attacks definitely going to be the number one concern, especially as we've talked about TikTok and all these other things and how it could potentially affect a lot of people. So I digress. We're getting down the rabbit hole today, aren't we? Walmart. Oh, so next up is Henry's article. Walmart exits challenging primary care arena by closing all its healthcare clinics. I actually saw this morning.
So I just find this fascinating, guys. Like I really do. I think because it dives into, and again, you guys can look up the article and read it, but it's so interesting how people keep talking about the baby boomers, where like this is the biggest generation and all these people are getting older, and like, the getting into healthcare is a huge aspect of where the money's going. But then you have companies like Rite Aid that are going under, that are, Walmart that are deciding to get out of this space. And it's like, I'm just so shocked, and again, my fiance who was in, the accident recently, the amount of money that they're charging for all of this stuff, it's mind blowing. But the biggest problem is the running it at an efficient rate with the insurance companies. It's like they're at this war. The insurance companies and the healthcare industry is literally at war to try to either charge and distribute funds fairly. The insurance companies don't want to give it out, and healthcare companies are you can't do it any cheaper, right? Then they're trying to charge more. So it's this weird dynamic that I'm shocked to see Walmart getting out of the industry. And obviously when you have huge players getting out of the industry, I think it says something. So, I'm curious to get your thoughts. Amazon just bought into one of the different, One Med. And, obviously we got Walgreens and CVS and all this other stuff that's still trying to float around. And I'm curious to get your thoughts of where you think the future is in this dynamic.
I think it's concerning from everybody's standpoint, people that need care right now, all the way to us needing care down the road. But that's the fact of living in capitalistic society, is these companies are all profit driven. And if they're closing these facilities down, that's just not a efficient or economic use of their funds, which is unfortunate. And that's just a sad fact of living here, but it's clearly just not profitable and they want to deploy those funds for something else. It could be that they just added too much too quickly and they didn't fine tune the system and now they need to recalibrate. Maybe another player enters the market. I think we have to see how it unfolds, but overall, I'd say it's concerning for people that need healthcare, but it's fact of doing business in America.
No, I agree. And it did say here the main reason for them shutting down was
No, it's just operational costs.
Yeah, it says the challenging reimbursement environment and escalating operating costs create a lack of profitability that make the care business unsustainable for us at this time. So, that makes sense. I mean,
it's like I read the article almost.
No, yeah, I know it's great. No, and it's exactly right. And what's interesting to me too is, Henry, you alluded to Rite Aid, and we had read some articles recently about CVS and their pivot to try to offer more healthcare services in their stores, and how they just recently got downgraded to kind of junk status with their corporate bonds, like their corporate debt. They're making a huge play into the healthcare services space. They've taken on a bunch of debt to be able to do so. And obviously investors now are concerned about what that future is going to look like for them. And we were talking, during the podcast we had, that how that's going to affect, just the commercial real estate market. Obviously, single tenant at lease properties, you see CVS's and Walgreens popping up periodically to be traded. And I've seen cap rates for these particular types of properties continue to expand because of the risk. Because historically, you think CVS, you think Walgreens, they're like, I mean, they were credit tenants, top shelf type of tenants, so that you felt comfortable buying these properties at absurd cap rates. But nowadays, it's not a foregone conclusion that CVS nor Walgreens will continue to perform well going forward. They've had to pivot, given the weird environment, or the difficult environment that the healthcare environment as a whole. Who knows if Walgreens doesn't have to shed some stores in the future,
Yeah, what was really fascinating though was just like so much of the rental market, like the leasing brokers and the world around tenancy. When you get a tenant, especially in retail, right? Imagine if you had a retail center and some, seemingly class A medical, multi-location company comes to you and says, hey, we want to take over X amount of square footage. You're like, great. These tenants would do fantastic. But now you're seeing more and more and more companies struggle financially, when it comes to this sector. And I just think it's very interesting. Like you were mentioning, they went from being one of the best types of investments that people can be looking for, the CVS's and Walgreens, and everyone's super excited to pay a 5 cap, to buy a Rite Aid.
Even less. Yeah. Crazy.
And now it's like, I'm even worried. Like, I'm about to get into contract on another retail center. I'm like, I don't know if I got to be a little bit hesitant, in some instances for some certain type of medical tenants. Even I just think you need to be paying attention to those different trends of what's actually doing well and what's actually under the hood not doing too well.
No, it stresses the importance of doing your due diligence when you're looking at these types of investments, because just because they're a brand name doesn't mean they're going to necessarily have strong financial health going forward. So, all right. So next up is an article. It's specific to Philadelphia, but I thought it'd be a good article to kind of highlight because of the mechanics of it. So mayor launches task force to streamline permits. CRE says it's long overdue. So in this particular article, it talks about the efforts that the new mayor in Philadelphia is taking to try to simplify and streamline the permitting process for, obviously construction, but also on the zoning side as well. So, they talked about how the struggles that they faced in Philadelphia regarding being able to process these permits effectively. Apparently, they're 22% understaffed, which is obviously a big deal. Another issue that they have is their payment processing is extremely archaic. They don't have any type of online payment processing. It's all done through check, so you have to mail in the check to the office, and then that obviously gets processed at some point. And apparently, the way that they handle the permits requires you to physically mail in stuff, and things fall through the cracks. And so there's been a lot of turmoil, or not necessarily turmoil, but frustration on the part of a variety of different business owners in Philadelphia regarding this process. And so the starting point for the mayor was to try to streamline the process of getting permitting for food. So opening a restaurant, getting your liquor license, etc. But they're trying to also focus their attention after that on the construction piece. And so they talk a little bit about, what that's going to look like going forward. They've already made a petition to the city to try to allocate more resources towards this particular department. And, I guess also they're just they're looking to incorporate new technologies that could help them monitor the progress of these types of permits, and also at the end of the day be able to process payments online. So, it just goes to show, there are some cities trying to make a difference. In my case, I'm sure in your guys' municipalities as well, it's always kind of a back and forth battle
Pain in the butt
with the municipalities to try to get things done. I'm currently under contract to purchase a building to do a small retail development on it, a mixed use development. And we've been under contract for 10 months to get through the zoning process. And we're about a month out before we get our zoning. So it's been about a year of us going through this process to get to where we need to be. And it's very frustrating, but there's only certain things you can do. I don't know. So I thought I'd kind of open up to the floor to have some discussions about permitting and zoning.
Kudos to this mayor to try to move things forward. I don't know if there's a state in America where that, you feel great about getting into the development world or the development space and feeling like you can get it done in a matter of weeks. I just don't think it doesn't exist. I think everybody realizes that most areas, even very, very pro-development areas, are still going to be 6 months, 12 months to get any type of project completed. I mean, heck, some property or some towns in which I own property in, I owe an annual business license fee of $25, and they do not accept anything other than a check, and it must be mailed in. And it's like the most, it's just like still silly, stupid things that are like, what day and age are we in, right? Like, it's like I can AI that handles just about everything. We have these vision goggles where I can be anywhere in the world and whatever, but you can't take an online payment. It's like I would pay $26 for you to charge me a fee. It's like, why is this such a big deal? Anyways, it's just things like that, I think, are going to really escalate some areas for major amount of money, and infrastructure and capital is going to be pumped into these different areas where people are very, very development or pro-development. And a lot of these townships that are very anti-development, very stuck in their ways, they're gonna struggle in the field. I really do feel there's gonna be a period of time where every township that is anti-development is gonna come into a position where they're going to be financially strapped. They're going to be struggling for tax money. And I think it happens to every township.
Yeah, I agree with both of you. I think there's a lot of good people that work in government or trying to move things through, but they run into this bureaucracy that is wild, and it's you can't tame it. It's become so fat, dumb, and lazy. And the people that try to do it just end up banging their heads against the wall because there's almost like an institutional effort to keep it fat and lazy so that the people that are ingrained in that system have job sustainability and everything that goes with it. We've heard locally in my market of them trying to do it as well. It's no better than it was 20 years ago when I started. In fact, I think you could even make an argument that some areas of it are worse and slower. So I applaud anybody that does try to take that initiative, but I haven't seen a whole lot of people succeed just because of how fat and stupid the system is.
No, I get it. I mean, just side note with this particular rezone, in order for us to get on the docket for the Planning Commission, which is the entity that oversees kind of the implementation of this rezone, you have to buy an ad in the newspaper of record, and it has to be in like the top left-hand corner in this little thing. And it's like, dude, who reads a newspaper anymore? And it has to be in print. It can't be digital. So it has to be physically in print. And I'm like, I haven't read a physical newspaper, probably in 3 years or 4 years. When I canceled,
Am I supposed to be the one as the youngest one here to say, what's a newspaper?
Yeah, yeah, that's what it is, right? I mean, I have the subscriptions to all the different Courier, the Courier Journal and the business journals and everything like that, but it's all digital now. So I have an app and I just read it on my app. So anyways, that's just me venting.
It's interesting. So I think this is one of those things that I think blockchain and AI technology really needs to spend some time, energy, and effort on. And it's like funny because it's like, if you ask any of these developers and any one of us on here as brokers, if the fees were the same, but it was just a much faster process, or matter of fact, if you charged more in fees, you could charge 10, 20, 30% more in fees. Not that we want to, but if you could speed up the process to a 10th or a 20th of the total time that it takes right now, these people would be thrilled to pay it. Like, the developers would not care. And I think it's just about really figuring out a way to enhance speed drastically. using these types of technologies.
Yeah, it's interesting. I lived in Puerto Rico for a couple of years, and the queues for getting your driver's license are like horrible. I mean, it takes over. You have to take a day off work to go to the DMV to get things done, and there's a whole industry that's formulated around it. So now you can go to a place, pay $80, and some guy goes to the front of the line and gets it for you. So it's like, because of the inefficiencies in the system, there's a whole industry that's popped up to be able to kind of streamline the process, and people will happily pay $80 to $100 to get it done because they don't want to have to waste a whole day to be able to get that, to get your license. And so thought I'd share that tidbit.
We're brainstorming about a new business model, people.
Do it. Let's do it. So LVMH for its luxury bags. It's also a titan of real estate. So Louis Vuitton's parent company.
I love this story because this touches on probably one of the most contentious debates that exists in commercial real estate, and that's buy or lease. There's few things that would have as much argument and debate back and forth between whether a company is better off buying their real estate or leasing it. And I could argue both sides of it, I think, pretty effectively. What this article is about is LVMH going and buying prime real estate in very strategic locations. They've bought up a ton of high quality assets in New York, right on Fifth Avenue. They've got stuff in all the major cities. I believe they mentioned London, Paris, Barcelona. And their whole strategy with it is that they spend so much time and money building up a store's location that if LVMH went and leased a spot on Fifth Avenue and they spent 10 years building up that brand and everybody knows it and becomes a tourist destination and the locals all know it, the landlord has them in a pretty good spot. So they could put above market rents in front of Louis Vuitton and they'd be forced to take it. Otherwise, they'd have to start it all over and again in a new location. So their strategy, and I just think that this is a great way of framing when it is a great time to buy, is if you have a location that can't be easily moved, then it probably is worth considering buying that location to hedge against any high lease increases down the road. You own the real estate. I think that also enters into the debate. What about spaces that aren't as important in those locations where you could move your business relatively seamlessly and not lose that goodwill? That's where I think the conversation can float into, well, leasing might be a better strategy. But I just found it fascinating that this big fashion mogul and the owner of this company, I believe he's the richest man in the world now.
Yeah.
So these guys are this is the definition of smart money. When these guys are doing moves like this, I think other companies should be paying very close attention.
Yeah, look at this, Henry. You're in Miami, so they
I
own.
was just here recently. This is what they own.
They're actually doing developments too, not even just like their luxury homes and stuff too.
Yeah, it says it co-owns or owns or co-owns areas outlined in yellow. So they own like a whole.
Well, that's also because they own like 30 companies, like 30 fashion brands, and there's a bunch. Like this is an area where like every single company has a multitude of different locations. Yeah, look, I mean, I think you get to a point, like you had mentioned, where it just always makes sense to buy. I mean, some of these companies are paying $5 million a year at this point or something like that, or some stupid number in rent, right? Or millions of dollars a year in rent. And the building itself is maybe only worth $7 million, like, or $8 million. And obviously because of their lease, it's now worth $20 million or $30 million because of the lease, because of the tenancy, because of how much money they're paying. It's like, like, especially, if you can walk in and basically, buy it through a hidden LLC and buy in some of these downtown areas where like, hey, I'd be comfortable paying $100,000 a month in rent. I would buy a building for $15 million all day long because I'm going to be there for 20 or 30 years more than likely. And I would have no problem paying $100,000 to myself versus $100,000 to somebody else. So I think this is a fantastic option. I'm open to supporting in any way that I can LVMH. So if you have any connections to the company, I'd love to chat with them about buying some real estate with them. But I think it's important to, like you had mentioned, to learn from these types of companies, because it's like, if you have that kind of budget for rent, I don't know why you're not looking at buying. I find that very interesting.
Well, it just takes up a lot of capital, which for LVMH is probably not a big deal. I mean, they got so much capital, but
sure,
most of the time the equation is, would you rather take that capital and throw it at your business when your margins on your business could be 20 plus right? Or 30%
Mhm.
or whatever. So
That's the opportunity cost of that capital.
yeah,
What
exactly.
could you
So
start another product line or expand into a new market? Should be able to earn a higher return within your company than in the real estate. So, I mean, there are a lot of companies that still strategically lease for that reason.
mhm.
Like a lot of Fortune 500 companies lease, even though they have technically the capital to buy.
Many franchises do too. I mean, like I work a lot with franchises, and most of them lease because they can expand faster. So
Mhm.
you can go from one location to potentially 10 locations in a 2-3 year period. Whereas if you're buying the real estate every time, it's going to take you a lot longer. Which
Of
is
course.
It's just two different strategies. I mean, at the end of the day, I have some clients that own the real estate that they're in, and that their goal is like get to 20 locations or 30 locations, eventually sell off their portfolio of businesses, and then they'll just own the real estate, and that's their retirement plan, which is brilliant,
Mhm.
but it just, to each their own, as they say. But I'm always fascinated by these luxury brands because their margins must be absurd. I mean,
Crazy.
dude, you sell a $10,000 purse, and I don't know what it costs you to make it, but I doubt it's even close to a couple hundred
This
bucks.
is why their locations are so gorgeous, because this
Oh yeah,
the
Yeah, but that's
margins
where
are
they spend the
spectacular.
money.
and
Right.
they pay primo rents because of that exact reason. So it's fascinating, man. I love retail. I find it super fascinating. So I'm glad that you were able to share this article,
It's got
Chad.
a while to see how much they owed in the design district.
Oh, so
Yeah.
that's considered the design district, as you said. All right, so last one because I know we're running tight. So self-storage slide continues with declining rents, projects abandoned. So I'm sure many of us have been in the marketplace for many years, and we've seen
Explosion.
the enthusiasts of self-storage,
Oh, yeah.
coming essentially to the marketplace in droves, especially since COVID. I feel like when everyone kind of got forced into being inside, and the checks started coming in, and people started buying more and more stuff, they needed a place to be able to store these products, and obviously that led to a big boom in self-storage. And I remember self-storage becoming a thing even slightly before the pandemic, but I did see it accelerate significantly since then. And so they've talked a little bit about the disruption that's occurred in the self-storage market. A lot of the bigger players are starting to modify their pricing in saturated markets around the country, and there's a lot of markets around the country where that's the case. And so smaller operators have had to do the same thing. There have been several consolidation efforts. The most notable was Public Storage bought Simply Self Storage from Blackstone last year for $2.2 billion. So there still is large consolidation happening, and a lot of projects that were started in 2021, 2022, even 2023, are starting to rethink whether or not they want to take the project on. So it looks like demand has dipped so drastically that last year developers abandoned 245 self-storage
insane.
projects,
That is
more than
insane.
twice the number in 2022. So not to say that there aren't markets out there that still have a shortage of self-storage, and they could very well be great investments, but it's important to not just read the headlines and say, oh, self-storage is recession resistant, it's like the best asset, the property type to get into. You really have to do your homework to make sure that you understand what's going on there. So thought I'd kind of open it up to you guys.
Yeah, I've heard that comment so many times about it being recession proof because people
Mhm.
need the space. I would actually argue that in a recession, if people need to free up a little bit of money, just get rid of your storage unit.
Yeah.
Figure out where you can put that stuff. Put it in a friend's
Or
basement. Put
just
it in,
they just get rid of it. They just
or
leave
just
it
get
there.
rid of it.
Yeah.
Just leave it. Yeah.
Yeah.
Have it on Storage Wars. Watch your
Exactly.
stuff get auctioned off on the next TV show. I think that if someone needs to start saving money, that's just how you could do it. So I think it's a cycle. It's just like everything. And industrial is going to go through this as well, where it's hot right now, but it will face pressures of a different kind at some point. And self-storage just got way too hot. Everybody was talking about it. I couldn't go a day without somebody talking about wanting to invest in self-storage. And when there's that much investor appetite and developer appetite, you overbuild, you add too much supply, you have too rosy projections, and once things start normalizing and you get that return to equilibrium, this is what happens. So it's happened in every asset class. It'll happen for the rest of time. It's a cycle.
It's like the second you start hearing it like that, it's like sell, get out, like get a primo
Mhm.
dollar, get out as soon as you can, because there's probably an oversaturation coming of some sort. And I'd rather buy it at a, look, I always believe in buying great deals straight up, no matter what. But, when you start hearing everyone and their mother, it's like, whether it's Bitcoin or self-storage or, whatever comes up
Multifamily
next.
for a long time there.
Exactly. Like all of a sudden an equilibrium hits where like there's just so much overproduction, over demand, or oversupply, where there's just nowhere near enough demand. You're always going to fall into these issues like you're seeing here today. Like I have so many friends that are doing the same exact thing. And I'm actually going to send them this article and be like, well, I'm curious to get your thoughts.
Yeah, 245 projects abandoned. Like that's pretty
crazy.
significant. I mean, and who knows what scale they're at? They may be small projects too. I don't know, but I mean, it's kind of interesting to see.
Yeah, I think listen, I think it'll always be a strong asset class. I think you just buy existing, and I think you'll probably be okay.